start by introducing myself. My name is Janese Williams. I'm with Supreme Lending. I've been originating for about a year now, and my team total combined, we probably have 20 years of experience between us. So there's really nothing that we can't handle, no problems that we've ever faced that we can't overcome. And we like to call ourselves the team of saving deals. So we would prefer for you to start with us and end with us, as opposed to get into a situation and have to call on us. But we can handle anything you throw at us. So this Zoom meeting is just going to focus on down payment assistance. And I'll talk about some of our popular loan programs that other lenders may not have that you can obviously use me for. So we really have every loan program in the book. Anything that anybody else has, we have. We even have our own in-house down payment assistance program called Supreme Dream. We have the T-Shack program, which is the Texas program. We have the Seth program. Everything, any down payment you can think of, it typically goes from 3% to 5%. It will pay for down payment and closing costs and prepaid costs in the Supreme Dream. So if you have a client, like I say, I feel like no deal should be left on the table, especially if they have the credit score to be eligible for a loan program. We also have programs that can offset a DTI, or the debt to income ratio. So if somebody just can't quite qualify for the house of their dreams because of their income, we can, put what it's called a MCC credit, or a mortgage credit certificate, in their profile. And I'll explain that in a little bit too. So one of the most popular ones that I'm pretty sure you've heard of is the T-Shack, or the Texas State Affordable Housing Corporation loan. T-Shack is a Texas down payment assistance loan. And I'll talk about it generally, because right now it's changed just because of the market. So right now they're only offering 3% down, but typically it goes up to 5% down assistance. The way that works is you need at least a 620 credit score to be eligible for the program. There is no max debt to income ratio. Honestly, we put your client's profile in our system, and as long as they get the approval in our AUS system, they're good to go. So that's what makes it a little different from a conventional loan or a regular FHA loan. We've pushed that DTI up a little high and gotten people approved and closed. So that is something to think about when anybody asks for down payment assistance. The good thing about down payment assistance, I guess you're probably asking, why should I do down payment as opposed to FHA or conventional? This is typically for the people that have money saved up in the bank, but not quite enough to close. If they just need that little bit of assistance, the thing is, you can't be approved for down payment assistance with no money in the bank. Nobody ever gives away a free home, and it's only a percentage of down payment and closing costs. So for instance, right now they're only offering 3%, and it's an FHA loan. So in an FHA loan, it's typically 3.5% minimum. And then of course your closing costs, and closing costs are, a few $1,000s more, and that's going to have to come out of pocket. So, 3% out of a, $300,000 house, that's $9,000 saved. It's a significant amount. What happens with that is that you get two different loans. You have your mortgage loan, and then you have your down payment loan. The down payment loan is at 0% interest for 3 years, and then forgivable at the end of those 3 years. So what that means is that your buyer has to live in the house for 3 years. They can't refinance it, and they can't sell it. And then at the end of those 3 years, that second loan is forgiven, and they don't even have to worry about it. And then they can refinance into a better interest rate or a conventional loan if they want to.
I have a question. What are the interest rates right now?
The interest rates right now are 6.25%.
6.25%, and that's
yes.
Today is March the 9th.
April 9th.
Yeah, April. Oh my God. Oh, month.
Close.
April 9th, 2022.
Correct. Yes. Okay. So again, it's a conversation that needs to be had with the buyer. Is this really a good fit, or should you wait a little longer and save up for, a better interest rate, the market rate? At one point, I will say DPA loans were almost matching market rate. So it actually made sense for people to do DPA and, save on their down payment. But now, it adjusts to the market. So you got to catch it when you can. Let's see.
So as far as putting in offers for people that have down payment assistance versus conventional versus VA, of course, we know cash is going to always, be the best. But are
Yes.
people still getting those accepted right now?
Yeah. So I had a client. So what happens is, because we know what the market is, because we're in it all the time, I like to underwrite, and Supreme honestly underwrites their pre-approvals. So the process that we have here is, if you give us a little time and get the documents needed in for us, then we can work together. I can underwrite your loan completely. Once you have a house that you want to put an offer in, I'll go ahead and call the listing agent and tell them, hey, their loan is completely underwritten. They are approved. They have cash in the bank. We can close quickly. We've done 14, 21-day closes just to make their offer more competitive, because I understand that a lot of people are cash sensitive. And if you're cash sensitive, you have to make your offer stronger in other ways. And the ways that we do that is to underwrite the loan completely, call the listing agent, and make it a quicker close. And, in this industry, everybody wants to make money, and why not make money quicker as opposed to later? So why don't we do a fast close? So that has happened. That actually happened very recently. It was a $345,000 house. It was a duplex. It was competitive. And his offer got chosen because of, underwriting and making it a fast close. So,
Okay.
yeah. Let's see, anything else about T-Shack? And then there is a website, and I'll go ahead, if you want to send me the emails of your team, I can send them a general overview of everything that I talk about, as well as the websites. And then one other thing about T-Shack is that it is, there are targeted and non-targeted homes. There are a lot of homes, and that just means that there are different criteria for the house that's chosen, and that typically happens. And, I can get more into depth if somebody wants more detail, but the website has everything. So if you have an address that you're curious about, you can definitely find out if it will be covered under DPA. But, most of the houses are, there's a few that aren't. There is an income limit with T-Shack. I believe it's 99,000 right now, and that is, borrower and co-borrower total. They can't go over 99,000. So once you're over, that means we have to look at different loan programs, and that is one of the, the limitations of being in a DPA loan. And that's every DPA loan, to be honest. They all have income limits, except for Supreme Dream. I'll talk about Supreme Dream.
Do they have to take a home buyer's course?
They do have to take a home buyer's course, yes.
Is that free?
Yeah, it is free. Mm-hmm.
It's like a day, half a day, 4 hours, something like that.
Yeah, I believe it was 8 hours.
8 hours.
I haven't looked at the time yet, but I believe it was 8 hours. And actually, sorry, let me correct myself. There are fees that come with down payment assistance, so it's not technically free. It does, once you close, there are certain fees, and that's any down payment assistance loan. And so that's kind of rolled into that home buyer's course. That makes sense. So different fees for different programs, all on the website. I can share that with you as well. But yes, there are fees, but it also offsets paying $9,000 for a down payment.
Nothing is free,
And nothing is free, correct.
You
Nothing
pay
is
for
free.
it at the beginning, or you pay for it at the end.
Exactly.
Along the way.
Yeah, so it's just got to be a good fit, like any other loan program.
Can you buy down your interest rate?
Say that again? Can
you buy down your interest rate?
Yes, you can. Yeah, it's still an FHA loan, and it can be bought down. Okay, so the next program is Seth. Seth is the Southeast Texas Housing Loan Program. It's the same deal. You can either get a grant or a second lien. Second lien is also forgiven. There's not much difference with this one, to be honest. They have the conventional loan program. The 640 gets you into a conventional loan. The DTI is a little lower. So it's 50% here for Seth, but it is whatever the AUS approves you at. So we've approved people at 55%. So that also deters, which program you would fit better in. Seth is higher. I don't do a lot of Seth loans just because it's I wouldn't say never, but it's typically not a good fit for clients. So, with Seth, you're probably adding another 0.5% or percent. T-Shack is typically the best way to go. They have the best rates. They have lower fees. But, just to be transparent with all the down payment assistance we have, that is one. Maximum assistance for Seth, and that is another difference, is I believe Seth is still offering their 5%, whereas T-Shack is only offering up to 3% right now. And it's all based on the final loan amount. It is treated as a FHA loan. So the max sales price, like you can't do a jumbo loan and get down payment assistance pretty much. You have to stick within the parameters. Right now for Seth, $492,500 is the max amount of house that you can buy with that loan.
What was that price?
$492,500.
Yeah, you can get a nice house for that.
You sure can. And then the last one I'll talk about is our Supreme Dream program. So with the other down payment assistance programs, you have a cap on the purchase price and you have a cap on the income amount. With Supreme Dream, you have none of that. There is no cap. You can make as much as you want and still get into the loan. We offer 3.5% to 5% of the purchase price of the house. The maximum DTI for our loan program is 50%. 620 is the credit score that you need to get into it. So it's a little lower. So if you have somebody that's in between, not quite 640, they can definitely apply to get into the Supreme Dream. There is no, like I said, no purchase price limit, but it is an FHA loan. So it is the FHA limit right now. And that's about $420,000. So still a nice house. But that is the criteria for that Supreme Dream.
And you can get new construction. I'm sorry.
Yeah, new construction, any house. Yeah. And also you don't have to be a new first-time home buyer. So anytime you buy a house, you're eligible for the Supreme Dream down payment assistance. And it does come with fees. I think it's about $1,000 in fees to pay that. But again, you're offsetting the cost of your down payment. So kind of balances out. Rates are a little higher. And that's why I always say, TSHAC has been the best DPA program that works. But if you're somebody that has a high income and you want down payment assistance, then we have a program for you. Like I said, we have a program for everybody. And then the thing that I mentioned earlier that has really saved deals, to be quite honest, is the mortgage credit certificate. Not a lot of lenders offer it or even know about it. So what it is, it's a special tax credit. You can get up to $2,000 back after you buy your house. And it also offsets the debt to income ratio. And without getting like super specific into the math of it, it is a formula that we use that we also add to your income. So say you just don't qualify because your debt to income ratio and you don't quite have the money to pay off any debt. I have seen, MCCs get added to profiles that were about $400. So that's adding $400 per month to your income to get you qualified into a house. Another example like this market is that you're probably not going to find a house anytime soon. Like it's probably going to take you more than a week or 2 or 3 in order to get your offer, put out and accepted. So when that happens, what happens to interest rates? Interest rates are, going wild, like they're going up. Like it doesn't matter when you find that house or not, interest rates are going to go up. So with that being said, you could be approved on, April 1st for a loan. And then by April 30th, interest rates have gone up so high that your debt to income ratio increases as well. Well, we have the MCC to offset that. And that way it gets you eligible back into that loan program and you don't have to worry about that. And it is also available for any down payment assistance. So you're double saving, which is great. And we can also add it to literally any loan program. As long as you apply, as long as you are eligible for it. Okay. This credit is actually exclusive for first-time home buyers. So nobody else can really apply for it.
And the first home buyer haven't owned a home in 3 years?
Yes, correct.
Okay.
Yeah. Mm-hmm. So no second home, no nothing like that. And that's the MCC. And let's see. Oh, and I will say when you are in the TSHAC loan, the MCC credit is free. There's no extra cost. There is, I think it's $250 or $500 to add it to your to any other type of loan program. So if you're in a conventional loan or a regular FHA loan and you want that added, there is an additional cost. Again, this additional cost could save your client from getting into the house of their dreams or saving a deal from busting completely. So like you said, nothing's free, but it's so worth it when you get your client into the house. And I'm a believer in never leaving a deal on the table. If, your other lender can't do it, I probably can't. I'm just going to be really honest. I will typically ask for questions about DPA.
I'm going to send you somebody's name when we get off of this. And
okay.
If, maybe you can help them.
Yeah, absolutely. I'd love to talk to you about that. Okay. And then just some other things to that, you know, your crew would like to know is we do have a 90-day look and lock program. Anybody that's really happy with the interest rate now and is, you know, good buyer, has a pre-approval in hand, they've been shopping, we can lock in that interest rate. It's good for 90 days. So basically you find a house in about 45 days and then we close and they are guaranteed the rate that we lock in. Just did that with the client. It's actually perfect for new construction because a lot of new construction obviously takes another 30, 45 days, sometimes 60 days to close. I'm dealing with that right now. Actually, it's taking his house another 60 days to close. His interest rate was locked in at 3.875. He's good to go. We close him next month.
Oh, wow.
Yeah. Yeah. And it's so funny because the builder lender kept, you know, calling and saying, hey, like, what's going on? And he's like, we're good. And I was like, yeah, don't talk to them.
Yeah, sometimes the incentives that the builder's lender give is, it sounds good at first, but it may not be the best one. You got to really wait.
Exactly. Yeah, sometimes cash in hand is not the best deal. Saving money over 30 years, typically the best deal. Exactly. Yeah, and so yeah, we talked about that. I explained it to him, and he was very happy. So he's just waiting for the house to get built. So that's one. And then we do have, if you guys have any clients that are self-employed, we do have bank statement loans or DSCR loans for any investors. That's typically if, you know, they don't file enough taxes to be qualified for a loan with their tax returns. Then we can do a bank statement loan, and that'll look at, you know, their last 12 to 24 months of bank statements. They do need to be self-employed for at least 2 years. That is a brokered out loan, but we do it. My mentor in the office has actually won certificates and plaques for closing, you know, an insane amount of bank statement loans. So the best way to do that, I always tell people, is to do it with somebody that's experienced in it, because I mean, there's a lot of moving pieces in those loans. And so, like I said, one-stop shop. Mm-hmm. But that is, and of course we offered the typical conventional FHA. Home ready loans are conventional loans that I really haven't seen people take advantage of. If you have a conventional buyer, home ready, if they don't make, I believe, over, it's either $86,000 or $90,000, we'll get them into a lower interest rate. Like, it beats the market rate. And it's a really good loan to have in your back pocket when you're offsetting DTI. It gets your conventional buyer qualified for more house. So that's always a good thing to have. We have that. Like I said, any loan that you can think of, we have in our back pocket. Okay. But that is it. See, I made it short and sweet for your Saturday.
Well, I appreciate you taking the time and explaining the programs that you have. I'm sure
absolutely
a lot of my mentees will be appreciative of this. And
thanks for having me. I appreciate it.
Yes, thank you. So we'll be in touch. And how can they reach you?
How can they reach me? Email. I will send, I guess I can send you I have flyers with DPA. It'll have my information on it. If they're hosting open houses and they want some marketing material, they can always reach out to me, and I can be the lender on their program so that I can answer any questions same day. Cell phone. I mean, everything's going to be in an email if you want to forward it over to your team. But I mean, use me as a resource. I would love to answer any and all questions. Send your clients over, even if they just want to pick somebody's brain about, you know, I'm not ready to buy for a year, but I just want to talk to you about it. I'm a nerd, so send them over. You're not wasting my time.
You love talking numbers, don't you?
I love talking numbers. Let's talk.
That's awesome.
Yeah.
Well, thank you very much. And I will definitely be in touch.
Perfect. Awesome. I will talk to you after this. Have a good Saturday.
All right.
Bye, guys. Thank you.